Check, check, quick sound check. Can everybody hear me loud and clear? What's going on, Coach Paul?
I hear you loud and clear, Coach Jay. Happy Friday.
Mm. Happy Friday to everyone. Coach Hoop says we're early. Yeah, we're a little early. We're starting 5 minutes early. Hopefully that's okay. Hopefully you're back from your bathroom break, grabbing a drink. It was a long trading day. A lot going on today. So hopefully everyone is good. Happy Friday, the end of the week. Let us know how your week ended up. Were you up on the week, down on the week? Anything you learned from this week? Coach, how was your week?
Um, okay. I was sick for most of it. But trading was, I can improve. I missed some stuff, but overall, um, I didn't get destroyed.
There you
And
go.
so I did follow my plan.
There you go.
I just missed some trades. How about yourself?
Up on the week. Could have been a better week, but up on the week overall, and I am happy with that. Let's read how our chat was doing. We got So a Sai up 4.3K in your Express Funded account. That's great. Charles Williams down all month. Try to review, right? Try to review. Is it you? Is it the markets? Is it your execution? Something like that. Let's see. Who else do we got in here? What we learned is Coach Dakota is a very good trader. Yeah. Put on a masterclass today if you were watching that. Came into the session down 5 grand and ended up positive 5 grand or 8 grand or whatever he was. So yeah, great trader, great showcase of what it takes to operate in these markets. So really good job by Dakota and with running the stream. Uh, up on the week and blessed. That's from Shapeshift Trader.
Nice
Awesome
job.
stuff. Lou says not getting destroyed is always a good thing for a trader. Yep, 100%. If you can stay in the game, that is where we want to be. Dan, congrats to you. Passed my rhythmic combine and 1K away from passing my copy traded Topstep X combines. Good stuff. Good trading.
Luciano was down $38, but came back from being down $1,100. All right.
There we go. Nice recovery. Nice
It's a
recovery.
scratch.
Yes, it is. And welcome, Anne Marie. Thank you for joining us. She says we survived Friday the 13th. Yes, we did. All right. Welcome to At the Buzz, our market recap. If this is your first time here, I'm Coach Jay. That is Coach Paul. The goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. This is our first time meeting. I'm Coach Jay, been a Topstep Performance Coach since June of 2023. Been trading for the past 12 years and in the futures markets for the past 5, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been involved in the futures industry for 4 decades. A trader, a broker. Um, I've been with Top Step for a year and a half as a performance coach. I'm here to share some of my experiences and share them with you and help you along on your trading journey.
Awesome. Thank you for that, Coach Paul. As far as news goes, I don't think we had anything on the calendar. We know all the big news came out earlier in the week. And of course, we have an FOMC rate decision on Wednesday. We did have Broadcom's earnings come out last night after the close. We saw that reaction in the NASDAQ. Broadcom, I think I saw, was up 25% today, and maybe the NASDAQ kind of following that a little bit, at least early on in the session where we did have an all-time high made. But as soon as we made that all-time high, we turned around very quickly. The markets made a high, sold off. Very interesting day today for sure. Anything else you see on the news, Coach?
Nothing much on the news front that I see. Um, I find it very interesting on the news with that Nasdaq is popping up and all the other indices are struggling.
Yep.
So
Money going into tech. I do see a headline here that I think is pretty interesting. The U.S. prepares new AI chip restrictions to close China's backdoor access. that could be interesting if that is the case, and we'll see how that develops in some of the chip companies that we have out there because we know that is where all the tech competition is going right now. Right?
Yeah. So that would make sense why Nasdaq's up and everything else was down. Um, but um, I think everybody's holding their breath for the last FOMC Wednesday. Um, but until then, there's some decent trading going on. So let's
Yeah.
begin it.
Yes, there is. Let me. There we go. I found it. All right. There are about 35 different markets that we can trade with TopStep, not just the equity markets. Um, And let's focus on real quick just the biggest percentage movers to the downside today. We had platinum down 1.68%, silver down 1.93%, and nat gas, our biggest percentage mover to the downside at 5.04%. If you remember, nat gas was the biggest percentage mover to the upside yesterday in that number one spot. And to the upside, we had heating oil up 1.47%, crude oil up 1.63%, and micro Bitcoin futures, our biggest percentage mover to the upside, at 1.68%. To talk about our big four, the four biggest volume markets that we trade at Topstep, we already mentioned crude up 1.64. We had the Nasdaq up 0.57%. The S&Ps looking a little weaker, down 0.17%, and gold, our biggest percentage mover to the downside out of our big four, at 1.59% to the downside. I have the Nasdaq up here right now. Like we said, we did make a new all-time high this morning at 21,907 half. Right? Is that the right price? Up
Yeah,
21,908.
8. Yeah.
21,908 even. New all-time highs in the Nasdaq. It looked like we were gonna just make the run to 22,000 in the morning, but the market had a different idea. Uh,
Well, at that level, after gapping up higher, now there was no buyers left from the way I look at it. It
right.
and boy, did it turn around in a hurry. Um, Interesting. That level was um, if we add one ATR to
Okay.
the settle, that was on the opening. That it met that. So it was a pretty extreme move. While
Yeah.
it was dramatic, it's still up 140 on the day. Um, uh, it was interesting, and it was a great trade by Coach Dakota. Um, and he held fast to it. Well, I just want to bring that up because that point was, and he's you talk when we talk about discipline. He didn't take the trade away where he's stripping it away. He held to his conviction.
Yep.
And he's not phased by the last trade. He looks for his trade and puts it on. So, a big lesson to younger, newer traders or traders who are struggling. But I found that very interesting because at that point, with the gap on the opening, we had reached the average true range from settlement. I mean, think about that.
Yeah.
And I had plenty of room to come back, and it still did it even fill the gap to settlement? I don't know.
Uh, so
We'll
settlement
go through it.
was 651 half. We didn't fill that gap. We filled the gap on the close, which is pretty interesting. So I did slow markets last night, and there was a trader asking, hey, do you feel comfortable getting long the Nasdaq because we have this gap up? And what I said was, I think we have to be aware that there is a gap, and I marked out the close gap with this purple box here. You have to be aware that there is a gap, but just shorting a market because there's a gap lower
Yeah.
may not be the best strategy, right? So if I just go blind short here at 760 and say that the market has a gap below and it should fill, at one point I had a trade that was, in my favor, but before we filled the gap, we moved 200 points to the upside before filling it. Now, this is the perfect example of we don't get to choose exactly how a market does something. So going with the idea of, oh yeah, the market should fill the gap. I don't know how many playbook trades say run 200 points up first, take a short, and then fill the gap. But once you start to see price moving in that direction, then it makes it look like a more clear possibility that it's going to happen or that it's going to happen now, right? Anyone who thought that there was going to be a potential gap fill was right on the day. But if you thought it was going to happen at 21,700, the timing was off. So really great trade by Dakota here. And we heard him say it. The potential target was 640s, which would have gave us that gap fill, or you could have been looking down towards settlement. But timing is really important, especially for day trades. I want to go kind of bar by bar here because, and I said this while I got on with Dakota during the session, but there was initially, and one of the trades that we talk about here all the time, uh, that first 3 minute opening range was a nice buy. Uh, really nice buy here on the open. We had the urgency out of that 3 minutes. The market pushed up 70 points. If you were able to take that as a long, we traded the 21,900. We got that 3 bar reversal. This is where Dakota was getting in, right around 881. I believe he got short initially. And then if we go bar by bar here, right, this still looks like a decent long. And one of the trades that we've talked about, and I saw some traders mention it, was VWAP left the range. We test the range, and that's the potential long trade because you're getting a better average than that VWAP. This trade still plays out. We get a perfect test of the high of the opening range to the tick and bounces for another 80 points or 60 points, 70 points in 6 minutes, right? Really quick trade. The thing about this, though, and I said it when we were on Topstep TV, Coach, if you take this long and you don't see the market make a new high, right, this is where I think position management is important. I could think that this market is going to go to 22,000. But if I'm the only one that thinks that and there are no other convinced buyers to think it, it's not getting there, right? So paying attention to how good of a job the market is doing at what we expect it to do is important. Where I could have had an 80-point trade and looking for 180 points, turn it into a loser if I'm not managing this trade, which is really important. So I think when you're whatever trade you're taking, keep the entire market context, the entire picture of the market in context. Is really important, right? Where if we just made a new all-time high above a major level, if we bounce and make a higher lower high, there aren't enough convinced buyers in this price in this market to continue pushing up, and that's where we have to think about taking our profits. Um,
That's a
because if you
great
go
point, Coach.
go ahead.
Yeah, it's a great point. Is that it's this rocket early in the 3 minute took off from a very high um, plateau. If we just go back to yesterday's close there, that gap, I mean, you have to take that into consideration. Where we were like, what, 140 higher, 120 higher. So the average two range is half of that already. The average two range now is about 300 points. Now we're already, so it's not like, consider that versus we were unchanged, or let's say 20 higher.
Right.
Rotation was a little different. So your expectations or your understanding of where you are, especially in day trading, um, it's a perspective to keep, because that was a great trade. Now with taking that trade and in your mindset, hey, do I hold this to the close? Do I have a runner?
Right.
Well, you're already meeting, like what I mentioned earlier, the average true range resistance. You've already met the current range expectation by, so knowing that, you have to tamper down your expectations for an explosive move, because it
Agree.
already was an explosive move.
Right. Right. How much higher can that rocket go? Um, if it's already in space, right? And then so this bounce here, reading some order flow, there was a big absorption of buyers here in this 880s. So really nice trade here. And like I said, I did catch a short in the Nasdaq. I didn't catch a short until down here, in the 770s, where initially this is a great long trade setup for me. I didn't take it, so now I have to kind of reassess after we get under this VWAP. I have to reassess. Could I just gone short here? Yes, but I got to remember, I didn't see the market this way. I'm seeing it like this. So all this time, this VWAP is still up here. If that's an indicator that I'm going to use, I have to assess how the market's doing, but we get some selling below it. This would be telling me to get out of a long, but maybe not necessarily taking a short right away. So the short I took was around here, where we got this heavy volume to the downside. We traded back up to around 50% of this candle, and I got
And
short
you
here.
never
Did I?
took out the high.
Exactly. Was I able to catch the move at the top? I wasn't. Did I wish I did? Maybe a little bit, but I could wish that I caught this short and never get a part of the move, or just find a spot to get in if there's a trend. Now, this is where, if I'm getting in this short, now I'm thinking about that gap. Right? If I'm getting in short here, that gap is a lot closer. And with all of this selling momentum to the downside, now I'm thinking, hey, it looks like we have the potential to fill the gap. And this is still, 100-point move to the downside. And the reason I'm sharing that is you don't have to catch the highs of the move in order to have a great day. Now, if you do it, better, obviously. But sometimes there are trades that show up later in the session. Uh, But once we fill that gap, we kind of consolidate uh, and hold the low of it and bounce right back into the middle of the range where we close. So two-sided trade today in the Nasdaq a couple of times, right? There was a great long opportunity to start the day, great short opportunity. I think it gave something to everybody today where we had a 2-hour range and then breaking out of that range again for another long trade. Uh, really
Kind of
nice
like
markets.
kind of like Santa Claus.
Exactly. Something for everybody.
Yeah, and coal for some.
Exactly.
Um,
Um, Coach, I know we are at Friday, so I'm going to go out to a weekly chart and let's take a look at the weekly. What are you seeing on the weekly here?
and just like we said last week, that this is not top heavy. This is explosive looking chart to me. Um, can it change? Yeah, but we held last week's low. We broke the all-time new highs. I think that to this week's low coming into next week is going to be really important level. Mark that level. If we fail that, well, we could have um, and and when I say fail that, we're talking this time next week, and it's settled below that. Then we've got some topish, but right now that's not hasn't happened. Um, Nothing on that chart looks bearish to me. How
Not
about
even a
you?
little bit. Not even a little bit. Yeah, not even a little bit. We closed up on the week. Maybe not the most decisive upward candle, but that's okay. We saw the rejection at the right. That wick is just today, pretty much. Um, but yeah, not a market that I want to short looking at this trade here. This chart here.
Spinning top. That's what I think they call it. And if that's a spinning top, we'll know that if it breaks that low and closes below it.
Yep.
So that level to me, mark that level down in the Nasdaq for next week.
21,352 is the price.
Um, so
And
let's compare that right away to our next. If we go to the S&P, let's
is there
start with that week.
is there a
Go
potential
ahead.
catalyst for something next week where we could see that weekly low get taken out or 22,000? I don't know.
Um,
Might be something on the calendar. Here's the S&P, coach.
um, okay, we stayed within last week's range. So let's mark last week's low as a big level for this week, for this upcoming week. Um, and it doesn't look toppish yet, but how many times do we see that? But I think anything underneath there, especially a close, we're going to get some pressure. But otherwise, that's not a bearish chart either.
Nope, not yet. Like you said, still
But
holding the
interesting.
weekly lows.
Yeah.
But the S&Ps do look weaker, right? If you look at it,
Yeah.
if you trade the the difference between the two, the S&Ps to me are what kind of led us lower today, where and really all week where there was not a bid. Obviously the Dow was the real sell off market, but if we're just looking at the correlation between the S&P and the Nasdaq, looks a lot heavier.
Yeah. And then the next, just while we're here, and then we'll go back to S&P. Compare that to the Dow. And boy, someone out there put out, they took that sell this morning on some urgency. Now, you know, the rotation, they're getting out of the Dow. It seems to be the S&P this week. But are they just shifting it all into tech and the Nasdaq? Um, I can make a case for that, but very interesting tale of two different markets there. Let's go
For
back to
sure.
the S&P and look at today's action.
All right, let's go to the S&P. I'm going to go to a 30-minute. We'll look at a 30-minute chart. Two-sided trade again today for the day session. We had, decent rally into the open. Once the market opened, kind of set these highs. This huge consolidation area, which was yesterday's range, pretty much.
Yep.
Yesterday's regular trading hour session range. We looked up into that range and immediately rejected off of it. Uh, just a much heavier market. We'll go down to the 3-minute chart and look at the session open. Did we gap up the same way in the S&Ps?
No,
We
I don't
didn't.
think so.
No, we didn't. There was no
No.
gap to fill in the S&Ps.
All that
Just
money that was coming out of the Dow and the S&P going in the S&P. I mean, going in the Nasdaq.
right, right. So no gap to fill here, and there we go. The volume didn't leave the range as early as the Nasdaq did, and not as convincingly. And then we could see same thing once we got back under that view up, acting as a resistance, and just another really nice sell off. Here's that similar candle, the one that I took a short in the Nasdaq. We can see highest volume candle of the day, even more volume than the open, and then that kind of set the range for the day. Someone had asked yesterday how I use volume. Go ahead, Coach.
That's very interesting. Um, we don't see that often.
No,
That soon after the opening.
yeah.
Um, that how many times? That's less than 20% of that. I mean, that's a rare bird. Um, what does that tell you, folks? I'm letting you go. That's the highest volume. So most likely that isn't stops. That's a commercial entity. That's either a large fund, someone liquidating
Right.
versus, they hit the stops. That was that,
It's a little more
especially
volume than
after
stops.
the opening, right? And the thing is, what was the high and the correction later on?
This
We
here,
couldn't, yeah, we couldn't take that out. That was pretty
yep,
bearish stuff.
yeah, I agree. We got a question here. JD 129 says, "Coaches tried the anchored view up bounce early, took a loss, and it was like I lost my head. Blew a combine. How do I tell myself to stop? Should have been bearish. I kept trying to buy." So this is where I'll say, and we said it a couple times before. When you develop a strategy, proficiency in that strategy, I think, says you know exactly what it looks like when it works, and you know exactly what it looks like when it doesn't work. For this strategy here, right? And if you and the way to know what it looks like when it doesn't work, this strategy here, if we're taking the breakout, um, if we're waiting for it, by the time VWAP left the range, the market was, you know, pretty extended from it, right? So could I take this as a long? I could, right? Where we take the test of the range, where I'm putting on risk here, which is fine because it's still at this point giving it. This is just a natural pullback, right? But this is why we establish risk and saying, hey, if we get to the other side of the range, this trade is now invalid based on price, right? Because one of the criteria for this breakout trade says that the market should be above the opening range for a breakout long. In this case, it wasn't, right? So if price trades below this range, then that takes away one of those criteria, right? So at that point, that trade idea is wrong. Or if we close under VWAP, that trade idea is wrong. And then from there, it's about now assessing what the market is trying to do again. And just accepting the fact that an idea that you have could be the wrong idea for where the markets are going, right? It happens all the time. I was wrong yet last night about the direction of gold, but it didn't cost me much because I knew exactly how much it was only going to cost me $160 to tell whether or not I was right or wrong on that idea, right? And that's where uh, risk management is really important, right? It's okay to be wrong, but if you allow that to, you know, send you on tilt or not be objective to the price action, then you might miss something. Like you said, you should have been bearish, but was there a signal to tell you to short? Right? If you got a signal to tell you to short and you ignored it because you wanted to be long off of that initial idea, uh, then try to have a quicker short term memory, right? Where you just forget it, move on to the next one. Go ahead, coach.
Yeah, I'll do it even a little. Good explanation, Coach. I'll do it a little more imperatively.
Mhm.
Let's take that trade. Two things. It wasn't. It wasn't what I'll call urgency. Is like in the first two VWAP leaves. I'm gonna notice if it goes to 5, 6, 7, it's what less urgent. Let's.
Mhm.
I like the trade, but we take that breakout. Say on the close of the breakout. Okay. Um, let's measure how much it's going to cost to put our stop in at new lows. If it
If
gets
I'm
just
getting long
trades,
here,
yeah, yeah. If it trades underneath, let's measure that.
6 points, six and a
Six
half points.
points, six and a half, so 350 dollars.
Yep.
Let's just say, am I good with that? Can I, first of all, can I afford that? What is my budget for the day? Um, Me, I limit. Let's say I have a $50,000 combine. I'm going to limit to $250 loss
So you're trading micros.
in trading. Well, even if I was trading, yeah. But let's trade. I'm an S&P. I
Okay.
don't have much room to be wrong, do I? Just accepting. Okay, that's my risk. Can I afford 350? No, I can't. What can I afford? I can afford $250. So let's say cut that in half. I do 5 micros. All right. And then it goes or it doesn't.
Mhm.
And I get stopped out. That's it. I mean, that's where, and then this is where experience, because I've been through this. Oh, shit. I just lost $150. I got to get that back.
Yep.
And then it's like the rail to hell.
And it looks like
Um,
that's what JD is saying. JD says, I had my first stop 2.5 points below VWAP. It got hit, but then I fell apart and lost my head. I tried to play the bounces, and this is exactly what you're talking about, coach. Go ahead, keep going. And I'm gonna try
yeah.
to find a document. Go ahead, keep going.
Yeah. So, and we've talked before about trading psychology or emotional trading. Is if you're new, this is very common, whether it's trading in business, in a poker table, at a gambling house, um, planning to manage your account and not manage to make money. It's a big difference. You can accept that loss. Okay, I'm done. I played that hand. It didn't work. I'm going to look because I love this trade. By the way, I took it. So I'm there. I took my loss with it. I measured it out, and then we've talked before about the principles of successful mindset. Is yeah, before do I completely accept that? What I'm saying, and I know that you accepted that, but did you really accept the loss, or you accept losing in the trade? And that's a subtle difference. So to get better is focus your attention on managing the equity and the balance in your account.
Yep.
And then it's like, okay, done. That didn't work. The next time that's set, I want to take that same thing. So learn from that. Um, and it was great. I mean, this was a failed one, and I don't want anyone to think that this is some fail safe. We're not promoting that. I would say it's a good probability that's going to continue. When am I wrong? All right. I hope
All right.
that works.
I'm gonna share something real quick. Let me see if I can do this. See what my Dakota live production skills are like. Give me 1 second. One, two, three. There we go. All right. This comes from the book Mastering the Mental Game of Trading by Stephen Goldstein. What coach is trying kind of talking about here, and I think where we should all try to get in our trading, this full cycle of trading. It's a great book, by the way. If anyone's looking for a book on mindset as far as trading goes. I don't read too many trading books. I guess I kind of do, but I thought this was a really good one. But this is the full cycle of a trade, observing the market, seeing something that makes you get into the market, taking the trade if the criteria meets. This is the trade being executed. You come out with an outcome, right? You either have a loss or a win on the trade. And this is the most important part of this cycle, especially for what you just mentioned, JD, the letting go, process the trade, and then move on. Uh, right? Process the trade, get a reset, right? So this is not doing anything, kind of stepping away. Uh, this is what normally happens with traders. This process here, right? This is the trader adding to the trade, right? Where I processed the markets, I bought more, it gave me an outcome. So instead of resetting, I'm just going right back to taking another trade, and then right back to taking another trade, and then right back to taking another trade. Um, this is what we have to try to avoid, right? Where whether you get a favorable or unfavorable outcome, you want to try to get a take a couple minutes to assess what happened instead of jumping right back in because we have to decide whether or not the markets are really presenting another good opportunity to us before we get to this point. The trader's death spiral, right? Where we're just short circuiting, like you just said, right? You lost your mind, right? And you're just clicking buttons, right? How many of us have been in this before? It looks like the Bermuda Triangle, right? Where there's no way out of this. Uh, we have to try to avoid this as much as possible, right? With taking a step back, assessing what happened, whether it went really well for us, because there's also the other side of it where you could have taken the biggest trade of your life, and now you're just like, oh man, I love that feeling. I wanted to do it again, and you end up giving it all back because you're not taking the time to process what happened. So um, just keep that in mind. Like Donna just said, it's tilt. Um, Tilt can happen after a positive trade too, where you just want to get back to winning. So avoid this. Remember, if you want to take screenshots or review the video or get the book because I think it's pretty awesome. This is where we want to try to be. And this was Mastering the Mental Game of Trading by Stephen Goldstein. I'll try to put a link in the chat if I can. All right, but let's get back to the charts. Hey, there we go.
All right.
Anything else on the S&P, Coach? We'll look at the Dow real quick.
Yeah, the Dow.
Dow's just been a seller all week.
It's like the same trade every day.
Every single day. It's kind of weird, actually.
Well, that's a program.
Right.
I mean, it's literally stair stepping. That's what, maybe you've heard the term stair stepping. That it's almost the exact, like there's a algorithm that's just getting out of the Dow, getting into Nasdaq. That's huge money flowing. Let's look at today's first half an hour.
All right, give me 1 second. I tried to put the link to the book in the chat, but it was too long. So today's first half an hour is right here. There we go.
So, is that today's from last night?
Yep, this is from last night.
All right, so last night with everything else, everything was dragged up. But another thing too is, we talk about overnight inventory and why that's important and why we talk about what kind of volume drove that up.
Empty volume
So
compared to what came in the New York session.
So now, when we talked about that relatively, what happened on the first half an hour today?
During the New York session, yeah,
Yep.
all of that overnight inventory was reconciled, right? They sold it all off.
Let's see what happened yesterday in the first half an hour.
Sort of the same.
Yep. So, and we had an overnight drift up, volume down. Actually, we had some big buying on the opening that failed.
Yep.
So it's more of the same, stair stepping today. But going into the opening, a 3-minute opening is much better especially for day trading. Let's look at the first 3 minutes.
So volume left that range. Very similar trade to the Nasdaq and the S&P. The one thing we did have in the Dow was that this is in a higher time frame downtrend, right, where the Nasdaq and the S&Ps are making new all-time highs. But similar trade initially was a decent long. But if you look at the higher time frame, are you really wanting to long the Dow? We can see that volume leaves the range, and it leaves in the first 6 minutes, presents a decent opportunity for a short time frame trade. But again, keeping the entire context in mind, this is a market that's been selling off for the past 6 days. Now, could this be the time that it turns around? It could be, but you need to see that in the price action in order to stay in this trade. And you had, 60 ticks to the upside before it eventually turns around and gets back to the sell program that we've been in.
Even then, there we go. You could buy that and have your stop in.
Yep. But oh, you all right, Coach?
Yeah, I'm still recovering. So, yeah, that I would have taken. Well, I'll tell you, I don't want to say I would have. I didn't trade this, but that's a buy to me on the opening.
Yeah, but if we put it into context, and I think you wouldn't not have taken it, right, because of where we are in relation to that 30, that 200 moving average, right? Markets are under it,
Correct.
and
Yep.
this is why you take one side of a market, only looking to sell this.
Yep.
Why? Because we're in a downtrend.
Yeah. I didn't, and I'm not looking to buy it.
Yeah, yeah. Don't blame you. TT Beasy says Dow scared me out of a good trade. It's so violent with the moves. I think this is where, and we talked about this a little bit during slow markets, maybe zooming out, where if I look at the Dow on a shorter time frame, if I'm looking at a 3 minute chart, there's a decent amount of overlap in some of these candles, right? But if we remember what the big picture is, we got to a 30 minute chart and an hourly chart. It's in a downtrend. So I don't want to make it sound like these are the easiest trades to hold because it doesn't just immediately go in your direction. But every day for the past 7 days, and I think I should have just been trading the Dow and nothing else, we're closing lower than we opened. So just like the Nasdaq example where we close that gap, we don't really get to decide how it happens. Trade location is important, right? Where you don't ideally want to be somewhere in the middle of this range if you can avoid it. But then letting it play out if it's presenting what you want. But yeah, it's not the easiest price action to trade. Definitely not.
Wow. Yeah, good point there. And I'm so used to buying stocks because they go up. That's part of the reason I don't. I'll buy that if it gets above the 200 and use it.
There you go.
But even in the Nasdaq, it did today. And I'm gonna keep this as the theme for today. Lose well. I, I lose well.
Yeah. Yep. All right. Anything else on the equities? We spent a good amount of time here, but I think it
Yep.
is important because these are some great markets to trade right now. But let's take a look at gold. Gold, gold, gold. If you guys remember, if you were on slow markets last night, I was looking for a long in gold. I actually took a long in micro gold, and I left it on. And there was some hesitation with me taking this trade last night. Uh, why, might you ask? We have this 200 moving average on the 30-minute chart. This white line here. We know how strong of a level that can be, and we were kind of opening up right around it. So I took the long, but I said, I want to see the market claim over this 200 moving average. But look at the 20 and the 50, right? These are clearly moving to the downside, um, even before we saw, today's price action. So I took that trade off for a scratch, where, again, keeping the entire puzzle in mind. In a short time frame, it's telling me buy it. In a medium time frame, it's telling me to sell it. The medium time frame is where I want to try to lean on the most, right? The medium, the longer term time frame is what I want to try to lean on. Um, Even if I take a trade, right, where I'm taking this trade and I had conservative price targets, I didn't take that trade and say, my price target is 27.50 because the market is making a decision around these prices. And we saw it while we were on the session yesterday. There was a big buyer that kept stepping in at 27.15 and just not allowing the market to get over that price. So at that point, when I see it, you know, I'm taking the trade off where did I accept the risk and I was risking about 160 bucks. I was trading with micros and my risk was below this low. But this was one where it's just like you ever get a feeling, coach, where you're just like, I'm in this and I know it's going to be wrong?
Um. Yeah, but different. You don't feel right. It's there's something inherently like it's not. You feel like there's nervous as a cat in a room full of rocking chairs. Um. Yeah, I can see that in that trade because look at all the confluences going on at
There's a
that point.
lot.
What's interesting is that trade, that opening trade was below, that open was below the 200, right? When we start the day.
Yep.
And then we rally above it and VWAP goes with it. And I can see why it's not, you're expecting some energy on the upside. And what's happening? You're bringing some volume, it's slowing down.
It's starting to flatten out.
Um, what's interesting, we don't see this too often, is look what happens when we settle underneath the 200 and VWAP gets underneath the 200. Someone sold that 200, in my opinion.
Oh yeah,
You just said
exactly what
that
they were doing.
someone was selling the rally, maybe not the 200. So the momentum couldn't keep going, and VWAP showed that. And so I think seeing that explains your nervousness, and you took that for scratch.
I took it for a scratch. Yeah, I said it in the Coach J chat too. I was like, I would really love some buyers to step in here because I want to trail this, this exit to somewhere in the profit, and they just never gave me the opportunity to. I gave it some time. We can see we chopped around my entry for about 4 hours, so it wasn't a quick just jump out of the trade. But it was like, okay, you guys got to give me something, or I can't stay in this trade. Give me two points, and it didn't. So yeah, I'm okay taking
Okay.
it off. And if it was gonna rally without me, then that was a trade I just was not gonna be in.
Yeah.
Uh,
Well, and
I
it's like you said, it spent a lot of time going nowhere.
right.
That's
Um,
probably the internal feeling, like you just said it. Give me something
right.
for the effort.
Right. I do want to point out also at the time we had, let me see if it shows up on and we talked about volume anomalies. I can't remember if that was on slow markets or here yesterday, but we had, and I pointed this candle out as well, and we can see it in relation to everything else around it. We see these two spikes. Now, again, these are going to look different. Let me go to a 5 minute because it'll look a little better. Depending on the time frame that you're using, uh, this 5 minute candle right here on a shorter time frame is why I wanted to get out of this trade also. Highest volume of the night at the time.
Oh,
And yeah. So now sitting through this consolidation, we could see it now, right? If I anchor a view up to that high volume, this is where the sellers started and said, price isn't going higher than this. So this is another reason I got out of that.
oh, here's a good question while we're here. What time do you make the opening ranges for gold?
If we're looking overnight, I'm looking at 6 p.m. Eastern time, which is the Globex session open, 6 p.m. Eastern time. And then for the New York session, when the markets open up, the technical open, I guess, is 8:20 Eastern time. But I'm just looking for volume, right? Whenever the volume starts to come back in the morning, I'll consider that the open because these markets trade all the time.
And that's the great question because the gold market, when does it close? The cash market? Never. So it doesn't get the same like an equity or stocks where you have the New York Open where all the volume comes. The volume can come at any time in gold. So great question. Good answer. Nice answer, coach.
Uh, what do you see in this weekly, Coach?
Further consolidation. Um, boy, it's got to get going. Here, well, let's look at the time. We're running out of 2024. There's literally 2 weeks left.
Yep.
I can see a lot of profit taking. Is it bearish? No, we're still in a bull trend. But it looks some profit taking. Now we have a 20-week moving average that it's holding. Spending some time here. Um, Trend still holds. Probably why we're getting violent movements here in the short
Yeah.
term.
Yeah. 100%. And is there a potential catalyst next week that could give us some more volatility in gold? I don't know. I think there's something on the calendar.
Starts with an F, ends with we won't use
OMC.
that.
Um,
Oh,
yeah, could be. And I'm just making a joke, guys. Right? We have the Fed meeting on Wednesday that we know is going to give us some volatility. Um, so we will see
so
what
I'm
happens.
glad you brought that. I haven't looked at a weekly in gold in a while.
This candle is pretty ugly. This
Yeah,
candle. is
Let's
pretty
mark
ugly.
that 20-week moving average. Come back to it next week. That's good.
2651.
Yeah, 2650. We'll call it 2650. Good enough for
Yep,
government work.
good enough.
And
Let's
why,
go over to
Coach? What,
go
quickly,
ahead.
why do you call that an ugly candle?
Uh, well, I mean, I guess it depends on how you look at it. This is ugly if you're a buyer, I think, right? Because
Yeah.
what this candle is saying is we were at one point, you can see where we opened up. We opened up at the lows. We had all of this price action to the upside at one point, and buyers were not convinced enough or strong enough to keep price up. And we've seen some of the selling that's been coming into gold recently. Um, I think on a weekly, if I look at the volume, this candle right here, we needed to close above this high at least, right? 2720. And I think that if we go back out to a daily, yeah, remember that daily volume candle we talked about, which was the highest
Uh-huh.
volume? We didn't trade, we didn't
Above it.
close above that. So this, yeah, looks pretty
Interesting.
ugly. Unless you're
Think,
looking to
yeah.
sell it. And if they get some continuation, I'm still looking at this daily white line here, 2531 daily 200 moving average. Anything else on gold?
That's it. Let's go to the next.
Linus Rain said it was ugly as well. Ugly inverted hammer. Uh, Inverted hammers are reversal signals, and yet many of you are saying gold is bullish. On a higher time frame, it is bullish, right? There isn't a market structure shift in gold. If we look at it daily, not yet at least. We're having some consolidation, but there's the potential for it. There's definitely a lot more selling pressure than we've seen recently in gold.
Here, one last thing on gold too. I don't. We
Mhm,
have bearish pin bar and Linus Rain. Thank you. Yeah,
mhm.
it's it's your perspective, but you're right.
Yep,
That weekly is that candle formation in the hierarchy. The weekly structure is by far more important than the daily or the hourly or the 3 minute. I mean, think about that. I'm glad you brought that up.
yep.
Um, so right at the 20-week moving average, um, tw 20 weeks is almost a half a year. So let's look. That's on my scouting report next week.
There we go.
Don't buy weakness.
There we go. Question here, and then we'll move on to crude. What is a good sign of the market structure shifting? If we start to take out some of these weekly lows, right, we can see this, right? Uh, with all of this selling pressure that we had here, right, we took out the low of the week, but we've been making higher lows on the weekly still, right? Now it's not the most convincing higher low, but if we start to get a break, I would say really if we're looking for a structure shift, this needs to probably sell off below 2600 with some conviction. Um, Something similar to this, right? Because this could have been it here, potential for it, but it held, right? So we need to see some of these heavy selling candles start to hold where buyers aren't able to take over control of the markets anymore. And so far they have been.
All right.
Crude oil on a daily, we're at the highs of the range. Someone asked, would I still be looking to sell this up here? Yes. I look to take a trade in crude today on a shorter time frame. If we go down to a 30-minute, we came up to Hoag's weekly kickoff 7120. We just never really got the momentum to the downside. But if I'm looking to trade crude at all, and it's like on the back burner, um, it's like yeah, if we don't have anything else to eat, it's somewhere in the back of the fridge. You can eat that. Um, but I don't really look at crude for too many opportunities right now. But yeah, we are at the highs of that range, right? We can see it here. Uh, the 20 and the 50 moving average are starting to get some separation away from that 200, but I don't know how much I trust it, to be honest. It'll have to show me that it can trade above these 72s for me to really believe it. This is very,
Uh,
very range bound. Go ahead, coach.
uh, Coach, let's do a trend line from that high on to the left.
Trend line from
From the
here.
highs of that chart, yeah, and I'll just click it onto those, yeah. that that's a long-term trend line that we've broken. Um, Probabilities say we go back and test it, and then we'll see what this if this market. That I don't think we've been watching that one.
Nope.
It's broken out of a range downtrend wise, literally trend line.
Yeah.
Um, so interesting. Let's keep that up there. Um,
Awesome. Any other markets that we want to talk about? We got about 10 minutes left here. We started
yeah,
early and we're
that.
still going to end on time. I told you we can't get out of here no matter what we do. Um,
Yeah, I want the bonds. It's
okay.
and maybe that's why gold is starting to break a little.
Let's look at the 30-year.
Yeah,
Want to go to a daily or a
yeah.
30
It
minute?
started at the daily there. Started the
Okay.
daily. When we talked
Remember
about
this
this,
white line?
remember that white line and what it rejected severely in front of FOMC, where there's going to be a rate cut. So it's saying it's either inflation's coming or whatever. I don't like to go into that. I'm a technician. That rejected and fell precipitously. That word.
Yep.
But we have a V.
Precipitation.
Yeah, it rained. So in front of FOMC, part of my market history tells me, are we going to have a Paul Volcker moment by the Fed? Are they not going to raise? And who brought this up to me earlier today? Like, no, we're not going to cut by a quarter.
Hmm.
If that happened, and I don't want to say that, but the way the bonds just broke, like in 2 days,
Yep.
they're long term bonds, long term. They're not buying it. They're not. Money can become. Why I say Paul Volcker moment wants to stop Chair Powell from going into this new administration and say, and this happened.
Hmm.
This is what Paul Volcker did. He said, now he did something extreme. He
Yeah.
jacked rates up to 15%.
Oh wow.
Oh yeah, they're at 15%. There was 18% T-bill rates. You got to try rapid. But all I'm going to say is, let's say he tightens money. That gold chart will get, and it will just collapse. But the way the bonds move this week, I bouncing underneath that 200. The big money's not buying inflation's over yet. And so that's like today. Let's look at what happened on a half hour.
Looks like the Dow.
It, hmm,
It
does it
looks
not?
like the Dow. Let's find a place to sell it.
50 moving average. Um, it's almost too late. By the time U.S. opens, it's hard to sell. If we go to the 8 o'clock open,
Uh,
maybe not, because that was a rally. Boom.
yeah, these markets are just going straight down. Do we have any treasury traders here? Anyone who's trading the bonds, the notes, anything like that? Um, I know we focus a lot on the equity markets on Topstep TV, but and we said it, Coach, the money is green, regardless of the market that you're trading. Um, if you can make profits, and these have just been. F Thomas says ZB, yes. So F Thomas, if you've been trading it this week, right? Just are you finding places to sell it? Are you seeing anything else? Juan Wick, we will go to micro Bitcoin after this. Um, draw a trend line from the last two lows and see the confluence with the 200 rejection. It's pretty. I'm the worst at drawing trend lines, but
Keep telling yourself that, kid.
I I don't use them. I don't. I really don't use them. So anytime I got to put one on, it's like,
Good.
here we go.
Well, there was a pretty trend line. But nice job. Now let's put a trend line off the two lows before it on the lows right here. What kind of structure is that? No, the flat one from the first low and the second low. There we go, straight across. That's going to. Let's watch that for next week. That's a level. Yeah. Is that a Dorito? Get
I think
Dolby on the
so.
line.
I think it is. I think this is what we call a Dorito. Uh, but yeah, very interesting here. And looks like we got
I-
some room down.
Yeah.
October 2023 lows. We got some room down. Really nice chart here.
Since you said it looks like the Dow.
It
Now,
looks
what does that
exactly
mean?
like the Dow.
Um, that's big money. It's not like speculative money. I mean, so end of the year, things are going on. But the urgency of the bonds right now, to me, is it's very interesting coming in front of FOMC with a quote unquote quarter cent rate cut that is 95%
Uh, last
expected.
last I checked, it was 95%. Let's see where it is right now. 93.4% probability of a 25 basis point cut.
All right, let's keep our eye on that. So we're almost over here. So
Y- yes, we are. Micro Bitcoin. What time does the bond market open? 7 a.m. Central Time, 8 a.m. Eastern. Micro Bitcoin. This is on a daily, coach. We held that 200 moving average on the daily, and looks like we're moving to the upside.
we're holding the 20, and yeah, boy, it's kind of looks like the Nasdaq.
Hmm.
Hmm.
Bitcoin moving like equities. Uh,
You know, the oligarchy owns the world right now. And what do they own? Tech stocks and Bitcoin. I don't think they own bonds.
doesn't
Hmm.
look like it.
There's a theme going on here. Um, but I'm just following the flow in all sincerity.
Yep. If we look at today's price action, here's last night's open. Volume never really left that range. It took a while, all day, really. But we have that 200 moving average. Coach Paul sees down here. We got some support. That 100,000 level acting as
Yeah.
a demand down here.
Kind of.
Just buyers stepping in. Go ahead.
Oh no, I call that sloppy. It's been sloppy. And there has not. It's been a sloppy trade this week
Yeah.
since we've hit that 100,000. Uh, it's been it's almost crude oil like.
Hmm.
So
Has to make a decision, right? We need some new buyers above 100K, and not just in futures,
yeah.
in spot Bitcoin, to continue. And they might be busy partying right now, so they'll get back to it at the beginning of the year.
All right.
Um, I think that is it. We are coming up on time here. Thank you always for a great week. Thanks for hanging out with us on a Friday. Make sure you hit that like button before we leave here today. It definitely helps us out, and we appreciate you all excuse me, being here. A lot of talking this week. Coach, you got anything before we go?
Get some rest this weekend. Um, I think next week's going to be an interesting week. I don't know. I don't know. FOMC with some things going on. But most of all, get some rest. Spend an hour reviewing your trades and enjoy your weekend. And I pass it
Enjoy
off to you.
enjoy your weekend, everyone. Like Coach said, do some review if you have to, but spend some time off the charts as well, just to get away from work. Right, this is work at the end of the day. As even if we love it as much as we do, it is work. So it's good to step away. Scott Vaughn, we saw your message. So shout out to you. I'm not going to read it, but glad to hear that we could help. Thank you everyone for joining. Enjoy your weekends. We will talk to you all next week. Coach, you have a good one.
You too.
Bye.
Bye.